Earnings, earnings, earnings. We all love our earnings reports. Hey guys, welcome back. Another two companies I'm going to look at this week that just this past week had earnings for 2023 reported out to all of us as investors. One of them, Exchange Income Corporation, absolutely obliterated again, as they continue to do. The other, Canadian Tire, not so much. And the market reaction is something I really want to look at because I've said this before. The market overreacts always. And sometimes it's good, sometimes it's bad. But it was really interesting again this week when both these two came out with their earnings reports. So stick around. If you've watched me enough, you know that Exchange Income Corporation is one of those companies that I'm really, really fond of. And I've commented in the past about how I seem to feel that this company is just flying under the radar. They have so many good things going for it. They've been in a major acquisition mode of late, and their philosophy is to buy companies that feed into their idea of consistently giving the shareholders value as well as sustaining and increasing the dividend that they give out every month. That's just an absolute sweetheart company to me. Well, in 2023, the company has come out and given their financial results. And yet again, as I said, they've absolutely smashed expectations. They have posted a record for revenue of $2.5 billion, adjusted EBITDA of $556 million, and net earnings of 122 million, and adjusted net earnings of 144 million. And this, I said, is one of those companies that my wife and I got into about a year and a half ago, 18 months ago. Really, the biggest attraction for me was the monthly dividend because I was a dividend hawk and I really still kind of am. But I was very interested in getting a monthly dividend, which was pretty attractive. Currently, it is 5.38%, but that's on the closing price as of Friday, which was $49.04. And what I'm going to do, I'm going to show up on the screen here the weekly chart for Exchange Income Corporation. And this is one of those companies, in the time that I've been investing in them, and I got to knock on wood here because I don't want to jinx myself, but in the time that I've been investing in them, I've not seen a single press release or single article that has been in any way bad or negative towards this company. They've literally brought out release after release, and it's an acquisition or it's a record breaking quarter, a record breaking year. And they just continue to impress me. And I've always kind of wondered why is the world or why are investors not more intrigued by this company? They really survived well during the pandemic. I mean, everybody got hit during the pandemic, but they really did a good job throughout the pandemic. They took a little bit of a hit to their business, as everyone did. There was no trouble with the dividend, however. It continued to be paid. And I know they've just recently, or actually, sorry, that's not recently, maybe in the last year, I think they did increase the dividend within the last year. Maybe it's only the last 4 or 5 months. I'll have to check that. But they've just continuously performed. And I've often wondered why this company doesn't get more attention than it does. And I have done an in-depth video on them in the past, but again, great financials. Again, many targets. Earnings per share $2.72, which I think was the same as what it was last year. And again, if you look at the chart, what I had originally led off the video with is the reaction in the market. If you look at the chart, you can clearly see when the earnings came out. I believe it was on Thursday, and the stock went up somewhere just under $3 per share to close Friday. And prior to that, it was a typical week, up and down, nothing major. But a pretty solid reaction to positive earnings. Now the question is, where do we go next week? Does this drop back into the $45, $46 range per share? Or is that a pretty nice increase given the great news and maybe again some new investors starting to take note and this company becomes a little bit more well known? Regardless, my wife and I are in this for the long haul. Our average per share is well below 49, and it's even below the 45 and change, 46 that it was trading at earlier in the week. And again, that monthly dividend, total return for us is another really good, solid return for this company, and very good, as I said, very good 2023 results. Needless to say, we're pleased. Maybe a company that you might want to look at. Again, I'm not suggesting this or recommending this at all, but they are quite diversified in what they do and all of the different businesses that they've purchased and what they all do. So give it a good look. And then there's the flip side. Canadian Tire had a very, very poor result, and the market reacted accordingly. And I do recall I've done one of these videos in the past on an earnings report from Canadian Tire, so I'm now starting to wonder, is this a trend? Is there a need for concern? Fortunately, I'm only in this myself. My wife isn't in Canadian Tire. And I don't have a very large position, but it's obviously a position that you want to keep an eye on and make the decision as to whether or not it's something that I need to worry about for that portion of my portfolio. So what happened is the company came out, and they came out with earnings revenue 3% lower than what was expected, albeit $17 billion in revenue. Where they really got hammered was the earnings per share, came in at $3.78 per share, and that was 70% below what was expected. So that was kind of, I think, the big news that caused the market reaction. Um, Year over year, there was a lot of talk in there about the declining results. When you take out the sales of petroleum, the sales actually rose 3.9%, but when you take out the gas sales, retail sales actually declined 3.1%. So that was, again, with the earnings per share and that realization of the decline in sales in the store, that I think is what a lot of people had the initial result to. And again, I'll put up the weekly chart. I just about pointed that way. It's going to be over here. The weekly chart for Canadian Tire, you can see it was kind of humming along at $141 to $142 per share, which is down from 52-week highs quite substantially, actually. And on the news or on the report, it literally dropped over $5 the day that it was announced. And it was interesting because I know the last report that I did, I don't know that it was a quarter. It was a quarter of last year that I did that video on. And again, same deal. It immediately dropped by about $5. And as you can see in this weekly chart, it dropped $5, but by the end of the week, it was right back up to where it was. And what that kind of says to me is that it is the typical reaction. And I've seen this one in the past myself where they didn't hit their targets. But by the end of the week, and I think I used the analogy in the last time I did a video that people were upset, so they were going to take their ball and go home. But by the end of the week, they were ready to come back into the game and play again. And that looks like it's exactly what's happened last week. Is the announcement was out Tuesday, it dropped by $5. By Friday, it was right back trading to what it was earlier in the week. And they also announced at the end of the week that the dividend of $1.75 per share was announced and to be paid in the coming month or months. I don't know the exact date. So again, all those things taken into account, it was a bad report from the perspective of what the expectations were. However, it's not something at this point that the market or the analysts seem to be overly concerned about. So I'm not overly concerned either. Um, are we in a bad state right now economically? Well, people are starting to kind of tighten their belts a bit, and maybe this is the type of store, even though it has everything, this might be the type of store that people are going to start to stay away from. Current dividend is 4.93% based on current costs, which is attractive. And as I said, $1.75 per quarter. Another one to keep an eye on, not suggesting, not recommending, but one to keep an eye on. So that's going to wrap it up for this week. I've had a look at the earnings reports for both Exchange Income Corporation and Canadian Tire Corporation. One great and one not so great. As I always ask, if you've enjoyed this video or any of the videos on my site, I would really like it and appreciate it if you would hit that Marksy's Place icon or button below where I'm talking right now. I think it's down in one of these corners. And subscribe to the channel. That way you will get notified every time I come out with a new video. I thank you all for sticking around, and until next time, take care and we'll talk to you soon.